thank you so much, everyone, for joining us this afternoon. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, and I'm very excited to kick off a session here with the Small Exchange and Tastyworks to talk a little bit about futures trading. And I have a very special guest here, Tom Sosnoff, joining me to talk about the Small Exchange products and doing some live trading together to show you these specific products. So before we jump into it, I just want to say, Tom, thank you so much for joining us this afternoon. Welcome back.
Thanks, Tony. I love being here with you. So let's do it.
Let's jump right into it. Now, before we do, I just want to do a quick disclaimer before we get started. What we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we are here to discuss. And we're going to start off by kicking and diving right into it. We're going to talk a little bit about the advantages of futures contracts. And we're going to talk about futures in the context of futures products in terms of traditional futures products. What's available there? What are some of the challenges? We'll talk a little bit about ETFs, and then specifically regarding the small exchange, the ethos behind the small exchange and the futures products that are available. But I want to spend most of our time today doing some live trading together with Tom on the Tastyworks platform, showing you some of the tradable themes that we see in the market here today and how we can take advantage of those using the futures contracts, and then giving and showing you how to access these products here at Tastyworks here at the very end. But before we get started, Tom, I just want to give you an opportunity to do a quick introduction. Normally when we do these sessions, I always say I learned how to trade options from you about 15 years ago, watching your webinars. But actually, to be perfectly honest, that's not true. I actually learned how to trade futures first before I learned how to trade options. So I remember my Twitter handle, I actually pulled it up back in 2008, 2007, was E-mini-TOS, standing for E-minis, which were the futures products that I learned how to trade or day trade on the Thinkorswim platform. But, I want to give you just a few minutes to talk a little bit about your background and kind of how you came to starting the small exchange.
Well, this is a lot of my background is on this crazy page here, but I started in the in 1981, actually, as a market maker on the floor of the SIBO. I did that for about 20 years. In 1999, we built Thinkorswim. We became a public company. We sold it to TD Ameritrade. We built Tasty, and that was in 2009. We built Tasty in 2011, and Tasty just got bought out in 2021, basically, and now we're still doing the same stuff. And back in 2000, and I think it was 2006 or 2005 or 2006, I had an idea to build to create all these futures products that were a fraction of the size, because as a retail customer, I felt futures products were too big notionally. So I went to the CME and proposed my idea. I actually called it DOTS back then. And they shot me down and said, great idea, but no interest. We don't have any retail customers. I went to the SIBO, and they partnered with us to build it. And then they just lost interest because they didn't want to compete with the CME. So I waited an extra 10 years. And finally, when we owned Tasty, I just said, screw it, I'm going to do it myself. And we launched an exchange, and the exchange was called the Small Exchange. And I was really excited. We created all these small products. We changed the whole industry with respect to the matching engine we built. We changed the futures industry with respect to the size of the products. We forced the CME to come out with micro products. We forced the SIBO to come out with micro products. The hard part for us was it's hard to get regulatory approval, Tony, for the products that you want. Like, the regulators want to see like the CME come out with something first because they're a bigger exchange. So we've been fighting for years trying to, push out new products and things like that. And anyway, that was the kind of the genesis behind the development of the small exchange. And I'm incredibly proud of it. We just sold the small exchange to crypto.com because we don't have enough customers. You need a few million customers to make an exchange worth. And I was hoping we'd get it, but we didn't get any support from any other brokerage firms in America except for Interactive Brokers. And but you know what? We built an amazing exchange, and I'm really proud of the guys. And we're going to support it by being their biggest customer for a long time to come. So,
Well,
I stand behind everything we built. It's amazing.
Well, I'm glad that you started the exchange, because I think there are a lot of the products that are very useful for some of the viewers here today. And I want to spend some time going through them and showing you some trading examples of that.
Sure.
But before we jump into it, if any of you have any questions regarding the small exchange, the small products, Tastyworks, please type your questions in the Q&A section. We have reps from Tastyworks, we have people from the small exchange, we have people from OptionsPlay answering questions in that Q&A section live as Tom and I are talking. So please, as we go along, if you have any questions, type them into the Q&A section. But Tom, let's just quickly run through kind of futures contract. It's really a contract that allows two parties to either assume or offset the risk of a price of an asset, which really just means that it allows you to speculate or take exposure in a specific asset, both long and short. And really, I think for me, the biggest advantage of futures contracts versus any other asset that gives you similar type of exposure is really two things for me. Capital efficiency, the ability to do it for with less cash than is required to buy or sell the full contract, and the ability to go long and short equally between those two things. There are some other additional benefits, such as the potential tax benefits if you are trading in a taxable account, and really just exposure to a wide selection of asset classes. We're going to go through some of those non-traditional asset classes and how you gain exposure or direct exposure through futures contracts, rather than through ETFs or some other products that kind of give you similar exposure, but not direct exposure to some of those asset classes.
You're spot on. The reason that futures are interesting is not because they're necessarily as strategic as options. So Tony, you and I love options because by definition, options are a gray area instrument and they're very strategic. But futures are leveraged, they're liquid, they're leveraged, and they're what we call static assets. So they're similar to equities, but they cover kind of a different group, like they cover commodities, hard and soft, but they're highly leveraged and they're much more capital efficient.
Right, that's exactly right. And actually, just before we move on, I want to launch a quick poll here. How many of you have traded a futures contract before? If you don't mind answering the poll here on your screen, I'm curious as to how many viewers here have traded futures. Actually, a good percentage. We got about close to a third, a little bit more than a third of viewers here have traded a futures contract. Close to 2/3 of you have not traded a futures contract before. So I'm glad that you guys are here to learn more. And hopefully today we'll be able to show you some interesting things about what you can gain exposure here to futures, because likely you're probably trading products using other vehicles like ETFs, trying to get exposure to the same products that you're able to get futures through, but without the capital efficiency and without the ability to necessarily go equally long and short. Okay, so we've got quite a few people answered already, but like 36% yes, 63% no. So great. Thank you so much for sharing on that. So let's talk a little bit about, traditional futures, right? Because futures have been around for a long time. The small futures are relatively new. Traditional futures have been a long time. That's where I learned how to trade futures, is on the E-mini S&P products. I remember, there was a reason that I traded E-minis and only E-minis, because I remember I was trading E-minis for probably about 2 years. And the one day I decided that I was going to test my ability to trade other things like oil futures, I absolutely had my ass handed to me because of the steep learning curve with these traditional futures contracts. And you don't quite realize it when you're just trading one product day in and day out. Once you step outside of the one product, it's like a whole nother world. The contract sizes are vastly different. The tick sizes are all different. The various expiration dates that you have to keep track of different futures contracts. That's really where I had some trouble trading these, what we would call traditional futures, not to mention the contract sizes. Most of them were just simply too large for me at the time as a retail trader.
Yeah, I think you've kind of summed up one of the reasons that I wanted to build the small exchange at the time was I didn't like the fact that things weren't standardized. So what we did is we said small, standard, and simple. Have the same expiration dates, have the same contract size, so it's same multiplier, and keep things, so that individual investors, since they have their eye on so many different things, if you really want people like Tony, you and I are both what we call product indifferent. And one of the keys to being a strategic investor and a successful strategic investor is you have to be indifferent to product. You have to be clear of the concept with respect to strategy, but you have to be indifferent to product because that gives you the necessary non-correlated diversification that you need to be successful.
Right. And that's exactly what I love about these products. And, again, a lot of these things are fungible, right? We talk about kind of getting exposure to oil and gold and US dollar. There's a lot of different ways that you can potentially do that, but we want to show you kind of a more direct way and a more capital efficient way to do it through these types of products. And I think that really leads us to their next point, which is ETFs, right? Traditionally, as a lot of viewers here today, especially the 2/3 of you that said that you've never traded a futures contract, you've likely traded GLD or SLV or USO or UUP or one of these ETFs that gain exposure to these non-traditional asset classes through an ETF. But there are some limitations there. One, they're not very capital efficient. They require anywhere from 50 to 100% margin to enter those trades. They are also subject to the pattern day trading rule, which means that you need $25,000 in your account to actively day trade these. And more importantly, I think these products don't necessarily track these products very well. Not to mention, it's hard for you to necessarily short some of these, especially if you have a small account. So not really, gives you exposure to some degree, but there's a lot of issues, in my opinion, to getting exposure to these products through an ETF.
And I'll just add one other thing. At Tastyworks, I believe we are the only online broker that lets you trade futures and futures options in an IRA account, long or short. So we don't restrict you based on the strategy. We don't restrict you based on the account type. So everything that we're talking about here today with Tony, regardless of the futures contract, the stock contract, whatever it is that we talk about, every single thing that we talk about today, stock options, futures and futures options, they're all tradable in any account type, Tony, that we have.
Right. And that's really kind of where we want to talk a little bit about, and I will, at the very end, we will talk a little bit about how you can enable futures trading here at Tastyworks. If you do have a Tastyworks account, if you don't have a Tastyworks account, we'll show you how to access one. But really, the small exchange tries to solve two of the problems that we talked about here, having the efficiency of futures and the ease of stocks in a way that's, as you say, small, standard, and simple. And Tom, I'll let you speak to a little bit about kind of the small, standard, and small, standard, and simple ethos of the small exchange. So let's first start with the small part, right? And I think this is the big advantage, if you will, of these futures versus other futures contracts, specifically regarding the audience that we are talking to here today, which is predominantly retail traders.
Yeah. So everybody needs, this is kind of interesting. So because Tony was talking before about the E-minis, and the indexes have gone up so much that the notional value of the products has gone up a lot. So the reason a lot of people didn't trade E-minis was because you could do 100 shares, let's just say, of 100 shares of an ETF like the SPY, and right now it would be $44,000, of which you'd have to put up, let's say, half of that, $22,000 or $23,000. But you control $44,000 worth of notional, and that's the smallest you can get for 100. The 100 shares are a round lot. But the problem with the E-mini futures is the smallest you can get there was the equivalent of 500 shares. So you're basically taking $44,000, multiplying it by 5, and you're up to about $225,000. So the biggest problem with futures, and this is across the board, was that they never had a contract that was small enough for most retail customers. If the average account size on the retail side, let's just say is $40,000 or $50,000, which it is. If the average account size is $40,000 or $50,000, then who the hell wants to buy or sell $225,000 worth of stock, having only one contract? You're at that point, you're going 4 or 5 times the notional size of your own account. You're leveraged 5 times. You can't do anything else. Your hands are tied, and it's too much risk for a small account. So hence the reason for developing the small futures, because you end up with something with a notional size of between 5,000, or actually in some cases 500 to 15,000, like a fraction of the size. And to me, that was the coolest thing. Hey, you know what? We can do like a stock replacement of a few shares, like 20 shares of stock, 20 shares of spiders in a futures contract with, 6-to-1 leverage. So the name of the game is capital efficiency. And Tony, you and I talk about this all the time. Capital efficiency is we're all strategists now. And so capital efficiency is the key to our strategic trading future. And if that's the case, you need to be able to get small, and you need to be able to do things that are highly leveraged, that trade small, that you can, utilize the capital in multiple places. And that's what these futures do now. Now there's a micro E-mini contract, which is 1/10 the size. So it's a $22,000 contract.
Right, exactly. And we're going to show you some examples here. And, the small futures, some of them are as low as $70 in terms of margin to get into. We're actually going to talk about one specific trade today where you only need about $70, $80 to get into one contract of these futures, really small for regardless of your account size. Even if you have a $2,000 account, you can, gain some exposure to some of these themes that we're going to discuss here today. But for me, the biggest thing is really standard, right? Futures contracts are really difficult in terms of different tick sizes, different contract sizes, and just the various expiration dates across the board. So, the $1 per tick is really key for me because it translates to what everyone here who are as viewers are familiar with, which is trading 100 shares of an ETF. If you trade 100 shares of an ETF and that ETF ticks up by a penny, you'll either make $1 or lose $1, depending on whether you're long or short. And that's exactly what these futures contracts mimic versus, for example, an E-mini contract, each tick is $12.50, which is an odd tick number to have, right? $12.50. Here, it's $1 a tick. It's easy to understand, how $1 a tick works, which is the equivalent of 100 shares.
We have a guy in our office. His name is Pete Molmat. He's the first futures savant I've ever met. His grandfather was a trader on the CME. His dad was a trader on the CME. Pete was a trader on the CME. He knows everything. He ran education for the CME. He's a brilliant futures expert. He knows everything. And having Pete sit about 15 feet away from me, I think, Tony, I asked him maybe 500 to 1,000 times, hey, how much is a tick in here again? When do these expire? I've been trading futures since 1982, I guess, 1981, 1982. I don't even know how long. My whole career, because I've been using them as a hedge against my positions. I've been trading, whatever. I'm still asking an expert, hey, how much is a tick in British pound? When does crude oil expire? I mean, all the things are so crazy. How much is a micro tick? Like I can't even follow all the stuff. So on the small exchange, we made everything $1. Every single tick's $1. That's it.
Right. The 100 multiplier and the third Friday expiration aligns with what viewers here are used to as options traders, 100 multiplier and third Friday of every single month. So these things are a little easier to manage. And lastly, simple. You guys have introduced quite a few different products this year since we started doing these events on small futures, but some of them that I really want to talk about, you do have the equity indices, which I think are important to have in terms of the exposure to the equity indices. But I think the ones that I want to cover here today, the US dollar, the precious metals, the interest rates, which I think is the most innovative product that you guys have, crude oil. And as those are some of the ones that I think we want to spend some time talking through, because those are the ones that you don't have a great way to get exposure to through an ETF, especially on the short side. But you guys have launched quite a few different products. We'll also talk a little bit about some of the products that are coming out next year that I think that I'm really excited about. So if you want to talk a little bit about the simple aspect of what you guys offer, I do want to jump into some of the trade ideas for today.
Sure, let's go. Let's keep moving.
So why don't you bring up your Tastyworks trading platform? Let's talk through some of these ideas. I want to talk through interest rates. I want to talk through US dollar. I want to talk through precious metals and oil, and just, taking some of these ideas that we all see in the news and we probably all have in our trading accounts, but we can't really quite gain exposure to them when we're equity traders, right? If we think interest rates are going to rise, as an equity investor, there isn't a great way to take advantage or profit from that per se. And that's really where I think, the futures products are far better in giving you that exposure, right? So, On options action, we do a lot of interest rate related trades, and all the trades that we end up doing using equity options is, in my opinion, just a very indirect way, if you way, of betting on interest rates, whether we're going long XLF or KRE or shorting TLT, or thinking about emerging markets and how those are heavily tied to dollar denominated bonds and they're sensitive to US interest rates. Those are all indirect ways. And I think one of the most innovative products here for the small exchanges that is now the ability to directly trade the interest rate itself. And I think that was a big problem with futures contracts is, even if you had a direct bet on interest rates, you had to trade bonds, not the interest rates themselves. So I want to walk through one simple idea and one slightly more advanced idea with respect to interest rates. Let's just talk about a rise in interest rates. Let's say you expect a rise in interest rates. You're expecting the Fed is going to raise interest rates in the next few months, or at least start pulling back on their bond purchasing. You're expecting interest rates are going to rise. Tom, first of all, if you were betting on interest rates rising, just out of curiosity, what would you use in terms of a product, the 2-year, the 10-year, or the 30-year? I want to get your view here on that.
Well, now, listen, my view is going to be a little bit skewed, and I'll explain why. Because I have fairly large positions in a lot of different underlyings in both the CME products and in the small exchange products. Like you can see, I'm short 50 of the S10Y, which is the 10-year futures in the small exchange, but I'm long the 30-year futures. So
hey, Tom, I don't mean to cut you off, but if you don't mind sharing your screen.
Oh, I thought I was. Oh my God, sorry about that.
No, it's okay.
Hold on one second. Let's see. Give me one sec. Sorry.
No, so I do want to talk about steepeners and flatteners real quick. But if you don't mind, I'm going to interrupt you before you do that. If you were just taking a simple rise in interest rate bet, right? Just a simple, I think interest rate is going to rise. Do you think you prefer the 2-year, the 10-year, or the 30-year product for that?
Okay. Well, that's right where I was going with this. Can you see my screen right now?
Yep. Good to go.
Okay. So it really depends on, what part of the curve you're looking at. If I was to bet just flat out, and you said to me, hey, I want to bet on rising interest rates, I buy the 30-year. But what's happened this year is very strange. And the short-term rates have gone up, but the long-term rates haven't. There's been a flattening of the yield curve and a contraction in the yield curve. And that happens to be, like you can see right here, this is what I was showing you before. I'm long 50 of the 30-year interest rates. I'm short 50 of the 10 years. That is we call that the NOB spread, notes over bonds. And that's 10 years and 30 years. And that's a yield curve trade. And that's what I have on in the small exchange right now is I'm long the 30-year and I'm short the 10-year. So when you ask me if you think, and these are interest rates, these are not prices, these are rates. So in this case, I'm betting that the 30-year rate's going to go up faster than the 10-year rate.
And I think this is a really important distinction to make, right? Because as equity traders and even as futures traders, if you bet on interest rates, you have to trade the bond prices themselves, right? And bond prices are inverse to the interest rates. So this is a product where you can actually trade the interest rates directly. So if interest rates go up by 1 basis point, you can bet on that directly, and that will show you exactly how much potential P&L that you will, or potential profits and losses you have based on the interest rate itself. And that is very important when you're trading these basis trades, right? Because you can trade one for one, the 2-year versus 10-year or 10-year versus 30-year. You don't have to look at the notional of the bonds and figure out how many contracts of the 10-year do I need and how many contracts of the 30-year do I need to actually trade a basis trade. And I think that is a huge, huge advantage for anyone, a simple, a bet on interest rates.
So let me just show you something. So we're on the top line here. I have the /ZB. That's the 30-year bond. That's the biggest traded product, and the bond product. That's the biggest of all the bond products. The notes are actually trade more, but this is the biggest product traded at the CME in the in the long-term rates. So this one I'm actually short, because when you're short the bonds, they have an inverse relationship. Price has an inverse relationship with yield. So if you're short the bonds, you're hoping the yields go higher. It's a little bit more confusing, But if I go to the 10-year note, which is the ZN, you can see here, I'm long the ZN. So I'm basically have the exact opposite position. The exact same position I have on using the small exchange products, but the small exchange products are easier because if you think 30 years going up, you just buy the 30 year. So, I mean, I hope I'm not confusing everybody, but I'm long 30 years in the small exchange products and I'm short the 30 years in the CME products, but they're the exact same position.
Right. So just to reiterate, if you think 30-year interest rates are going up, you just go long the 30-year smaller futures contract.
That's right.
And if you don't mind, could you just set up an order ticket to go long one contract of the 30-year, just so we can take a look at that on the small exchange?
Sure. So the beauty here is, and again, I'll show you, we have a couple of different watch lists. So one of the things that you can do in this case is you can go over and we have a futures watch list and you can basically choose, futures all small exchange. And here's all the small exchange futures. They just pop up. So if I wanted to do the 30 year, you see this, it pops up S30Y. And the market's pretty simple. It's 31 by 33. So it's two ticks wide. So if I wanted to buy it, I just click on the offer and then double click here and I'm filled. And if I wanted to sell it back out, I just click on the bid, double click, and there. I just bought one and sold one. I lost $1 in the process because I just bought the offer, sold the bid. But that's how tight the markets generally are, one tick wide. And this, again, the simple thing is just click on the offer to buy, just click on the bid to sell. And and that's how easy a future is. And you can do it any account type. And again, you can spread them off against other futures. You can spread them off against options. One of the neat things about small exchanges, we'll be launching options in there very soon. And so we'll have smalls options, which will give us a lot more strategy. But that's how the small exchange futures work, Tony. That's how easy it is. Just click on the offer to buy something, click on the bid to sell.
And I just want to reiterate, a price of $18.33 on this futures contract refers to 183 basis points on the 30-year. And then if you look at the S10Y, which is the 10-year at $14.40, that's looking at 144 basis points on the 10-year. And then the 658 on the 2-year refers to a 65 basis points on the 2-year. So those are basis points that you are actually quoted on when you're looking on Bloomberg, when you're looking on the Wall Street Journal. You're not quoted the bond price, right? You're quoted in interest rate terms. So this allows you to trade the interest rates directly, not the inverse of the bond price, which is the most confusing thing.
So this is really interesting because, and this is why we did this. So if somebody says to you, hey, what are interest rates right now? And you say, well, the 10-year is trading at 1.44. That's what the interest rates are, 1.44%. Hey, where's the 30-year trading right now? Oh, it's trading at 1.83. That is the actual rate. That is the rate, 1.83. That's where you can trade it. And if somebody asks where the 2-year is, it's trading at 0.65. Now, those are the actual rates. So you just move the decimal over, it's 0.65. And that's how simple this is. Those are the real rates. Now, just like what Tony was saying, is if you went to a classic CME product and you typed in /ZN, which is the CME notes, the number that would pop up would be 130 and 130.21. There's no way you could compute 130.21 into whatever the current interest rate is. Good luck. Good luck using that formula and trying to figure it out. It's not doable. So we go back to the small exchange products and the 10-year, and then we're like, oh, it's 1440. I'm sorry, it's 1.44. Sorry, right. 1.44.
And I do want to note, right now it's 4:45 p.m. Eastern time. As equity traders, we've been off for about 45 minutes or so, yet we are trading futures live right now because the futures markets are open until 5 p.m. Eastern. They actually open at 8 a.m. Eastern and they close at 5 p.m. Eastern. So you do have some extended hours to trade beyond the hours that you typically trade equities with, or equity options rather.
Yeah, and like, again, here's the 10-year. You can buy 42s and sell 40s right now in any of these. But I also should note that if we went to the CME products, just so you can see, the markets are a half a tick wide. So like, all these markets, and there's 1,000 up on each side. So the markets, the futures markets for debt instruments are highly liquid all the time. So there's no inefficient pricing. That's the cool thing. There's nothing inefficient about this. It's all just based on size and simplicity.
Right. So, before the market closes, let's go through a few other examples. Let's talk about precious metals, because precious metals have really sold off heavily here over the past a week or so. And I really think that there could potentially be some downside. Specifically, silver is trading near some major support levels, starting to break below that. The great thing about the precious metal products here at the small exchange is really, you don't have to choose between gold and silver, right? When you're trading GLD or SLV, you have to choose one or the other, or you can potentially take a position in both. But SPRE, which is the precious metals futures products here from the small exchange, you actually get a blend of both. So let's take a look at perhaps taking a short position here in precious metals and just how easy that is. Because if you wanted to short GLD and SLV, that's not something that everyone has the ability to go about doing in their equities account. But here in the futures account, you can do that very easily.
Yeah, well, one of the cool things, Tony, about Tasty is that, well, first of all, this is SPRE, we call it. And you can see this hasn't had an uptick in, man, we'd have to go back to the beginning of November to find an uptick in crude oil. I'm sorry, in precious metals. And it's, like you said, it's about 60% gold, 30% silver, and like 10% platinum. But it's kind of a nice market. I'm currently long 5 contracts in here that I just bought. And let's just say, so unlike Tony's a little bearish, but I'm a little bullish. That's what makes the market. So I'm going to click on the offer and I'm going to buy these 5 contracts, Tony. And I'm filled. And so I just bought 5 contracts of gold and silver, took the offer, and I'm not just fading Tony. I'm a contrarian, so I buy now. So I was buying the dip, and we'll see what happens. But I just bought the equivalent, Tony, of it's about $500 of, let's call it notional, so about $2,500 worth of gold and silver.
Right. And, again, like you said, that's what makes a market. I think the reason that I wanted to show investors, the short side of things is really because, if you're trading, you can sort of replicate what you just did with GLD and SLV, right? You have to do a little calculation, number of shares that you would have to do, but you could probably get pretty close to that using GLD and SLV. But I will say, getting a short gold or short silver position, not so easy for a lot of equity investors. You have to look at maybe buying puts or selling some call spreads. It's not easy to get a direct short exposure in precious metals, but outside of these futures contracts.
Yeah. And can I show you something else that's really interesting about this? So if we were to sell, these are actually long, I'm already having long, so it's going to mess it up a little bit, but let's just say I was to do one futures contract here, just one. It doesn't matter whether it's long or short. Let me just move this down for a second. So do you see right where my cursor is here, where it says the option buying power is $646. All right. You see that number, 646? That's the option buying power. Buy or sell futures is the same. So it's $646. That's the current buying power for one future. If I go to GLD, because this is going to make Tony's point, and type in GLD, and then I'm going to put up about 20 shares here, Tony, just for the hell of it. Okay. Because it's about 20 shares worth. And if I go to buy 20 shares, it's about $661 in, that's actually, you know what? I take that back. It's, this is portfolio margin. You know what? You're not going to get the right number from you. It's the equivalent of 30, it's the equivalent of, it's $165 stock times 2 is $32 or $3,300, and you put up about half that, so it's about $1,600. So the difference is, to do 20 shares of GLD, you have to put up $1,600 and borrow $1,600 from us, or put up $3,200, right? If you do it using the small exchange future, you only put up $646. So the capital savings is almost 3 to 1 with no margin, there's no buying power. You never pay any margin when you do futures. There's no such thing. It's already built into the price of the future. So the capital savings of stock versus futures is about 5 or 6 to 1, and fully margined, it's 3 to 1.
Right. And that's really one of, when we talk about capital efficiency, and I do want to talk a little bit about margin as well and leverage, but let's do that after the close. In the next few minutes before things close, let's look at oil. Sure. Oil is one of those things that's really difficult to get exposure to. Do you use XLE? Do you use one of the oil companies? Do you use USO? I tend to find that none of those products are great exposures to oil prices. You get some correlation or a decent amount of correlation, but it's never close to anywhere near 1-to-1 in terms of correlation. So the oil products are very interesting. I will caveat the fact that the oil product is the only one that doesn't expire on the third Friday of every single month. It expires on the second Friday of every single month, but it does give you a direct exposure to U.S. crude. So, right now we've seen crude come down quite a bit in terms of pricing. Perhaps you're expecting that crude might come down a little bit more, maybe back down to that $65, $64 level here. Looking at a short position in crude, traditionally I would go, I would buy a put option on XLE or use one of the USO products, which I don't particularly love, but that's really the only way to do it. Here, you can get direct exposure to short crude by shorting one of these futures contracts.
Yes. So for example, right now the market is 0102. So I'm going to replace this. I'm going to hit the one bid, fill. So I just sold the 01. So, the market's a little bit wider now. Now it's two bid, but the market's a little bit wider after hours, but it'll be, during the day, it'll be 1 or 2 ticks wide.
Right. We're trading just a few minutes before the close right now. So we do expect things to widen out a little bit, but during the day, I've seen these trade at 2 cents, 3 cents wide pretty much all day long. Yeah. And many times I will actually put my orders inside of the bid ask. I actually don't usually trade the bid. I'll place it at the midpoint or usually 1 cent off the midpoint. And I've seen fills pretty quickly on those types of trades.
Yeah, I agree. Totally.
We have a few minutes. I do want to talk a little bit about, kind of what's up next with respect to the small exchange and some of the products that you guys are looking to bring out here in 2022, because that's really kind of what I'm excited about. We are doing a full year of education of futures trading every single month in 2022. We're going to be doing monthly futures education. And, Tom, my understanding is that there are some really exciting products coming out in 2022. Specifically, you had mentioned already options on futures coming out at the beginning of next year. And I know a lot of our viewers that are options traders are going to be quite excited about that.
Well, having some small options that actually trade will be really good. A lot of our market making firms are all option market makers. They do a better job with options than futures. They do a much better job. So we're excited we've been approved for options for quite some time, but we haven't been able to find the exchange clearing firm, OCC, willing to clear our option trades. I mean, they've never cleared an option trade before, basically, on the future side. So we're in the final stages with them. Like I said, we've already been approved, so we're waiting to roll out options, and that's very exciting. There's also, Tony, it's so funny when you sit around and you just brainstorm, you come up with different kinds of futures. We've played around with so many different things from daily expiring cash futures to futures on, like we're trying to launch futures on Ethereum. We're trying to launch, specific. We'd love to have futures on Solana or Cardano. Like we're trying to do things that nobody's done before. It's hard to get regulatory approval, but I think once we get options, we're going to be able to bust this stuff open and really get a lot more products that we just haven't been able. We're looking at different types of volatility futures. We're looking at everything that we can, and we're throwing the kitchen sink at the regulators to say, hey, you know what? You got to approve something, and we keep battling it. We launched a cannabis future this year, and so called S420. And I mean, cannabis hasn't really had an uptick in the last couple of months, but we try. We launched a Bitcoin future that is based on equities. I mean, it hasn't picked up the traction that we want, but it will.
Yeah, I'm really quite excited about some of the crypto focused futures products that you guys are working on here towards the beginning of next year, the options on futures. So those are some of the things that we are going to be introducing every single month as we go through this education. So for those of you that are currently looking to open up an account here at Tastyworks in order to trade these, you can do so at trade.optionsplay.com/tastysmall. You can do that here right now. If you save that link to open up a Tastyworks account in order to enable your futures trading. And I do have an update slide for everyone here who is watching, where we have if you open your account here at trade.optionsplay.com/tastysmall, I do want to reiterate for everyone here who's watching that you can enable your futures account by going to applying for what Tastyworks calls the works. That will enable futures trading for your account, and you can apply for the works using this link here on your screen, which I will post into the chat window for everyone to enable futures trading if you already have a Tastyworks account. And I just want to do another quick poll here. How many of you currently have either a Tastyworks or IBKR account to trade futures with? Okay, so I see about close to 40% of viewers here already have a Tastyworks account. 50% of you
That's
say
great.
you don't. So if you don't have a Tastyworks account, you can sign up using trade.optionsplay.com/tastysmall, which I will post a link here into your chat window. For those of you that do already have a Tastyworks account, you can enable futures by applying for the works, which I also sent a link into the chat window here as well. And just to again reiterate, during 2020, we're going to be embarking on monthly futures education with the Small Exchange. Every single month, we're going to come back. We're going to talk about different trading strategies, some of the ones that we talked about here with Tom, such as the interest rates, which I think are some of the most interesting ways to leverage these products for you as an investor or retail investor. We're going to be talking about those specific products, those specific trading strategies, diving deep into each one of those and introducing any of the new products that do come up, especially the options on futures, being able to get access to all of those products and knowing that those products are available, I think is really important. So if you sign up for the futures education, which you can do so using the link here on your screen, which is trade.optionsplay.com/futures-edu. You'll be able to sign up for our next event, which is coming up at the end of January. And hopefully, Tom will be able to actually introduce options on futures on that January 27th event with Tastyworks as well. So a lot of things coming. A lot of things coming down the line here with Tastyworks. And just one last poll here before we open this up for Q&A. Just please answer yes or no. If you'd like to find out a little bit more about the Small Exchange futures products, we'll send you an email with some of the things that are coming out. And great, so many of you have answered yes here. Almost 98% of you have said yes, you want to get access to more of this information. So I'm really glad that you guys are clearly engaging with this type of product. I hope you guys find this useful. At this point, let's open this up for Q&A for a few sessions, a few minutes, before we turn this off here for today. So if you don't mind, type your questions into the Q&A section. I see a lot of questions have already been answered by the team here at Tasty and the Small Exchange. So please type your questions into the Q&A section for Tom and I. We'll spend a few minutes to try to answer some of your futures trading related questions and hopefully send you off in the right direction. Let's see. Yes, this is going to be recorded. The slides will be available to you as well. So I'll share the slides with the links to everything, how to sign up for a futures account, how to sign up for a Tastyworks account, how to sign up for the ongoing education that we're going to be doing in 2022. And the slides in the recording will be sent out to you. A great question here, Tom. What is the fee to trade small futures?
It's very reasonable. The exchange fees, I think, are only 15 cents, whereas like the CME is like $1.25, and the commissions are only 25 cents.
And just for those of you that are active traders of these small futures, you can subscribe to a community membership through the Small Exchange a website, and that will give you a 50% discount on those commissions from 25 cents.
On the exchange fees.
Sorry, on the exchange fees, 15 cents to 50 cents, 50% of that discount on the exchange fees if you have a community membership with the Small Exchange. And you can get access to that through the Small Exchange website, and we will be sending a link to everyone afterwards on how to take advantage of that if you are trading these products fairly actively. Yes, that was actually one of the questions. Let's see. Tom, this is a question that we continue to get, and maybe you have an update for us, but any word on Tasty Trade in Canada?
Yeah, I mean, Tasty is all done with our Canadian application. We are just waiting for Apex to be approved. They're our clearing firm in the U.S., and they have filed for regulatory approval in Canada. And as soon as Apex gets regulatory approval, we'll launch. We were hoping that the regulators would just rubber stamp them. They didn't. So the process took a little longer, but Tasty is all done in Canada. We just don't have a clearing firm. None of the clearing firms in Canada would clear us because of the type of business we do. We do a lot of complex option trades. We do futures. And none of the big banks there do any of the business that we do. And none of the clearing firms in Canada would clear us. So we had to work a deal with Apex, which is our US clearing firm, to go to Canada. They agreed. And so they're going through the process now. We're basically all done. We just don't have a place to clear. And so we're just waiting for Apex, and hopefully it'll be very soon.
Thank you for that update. I know a lot of our viewers are in Canada and have been waiting for quite some time and continue to ask these questions. So I'm glad I am
personally banned myself from traveling to Canada because I can't answer any more questions. I mean, it's so frustrating. Like we're pulling our hair out over Canada. It's like it's unbelievable how frustrating it is.
There is a question here about the community membership and how much that costs. I believe the community membership is $100 and it's a lifetime membership.
Yeah,
which will
it's
give
$100. It's good for life, and it just gives you 1/2 the exchange fees for life. So we did it originally because I loved the model, and I wanted to create that sense of community, and I wanted people to be subscribers, and so it works. There's like tens of thousands of people that have subscribed, and it gives you half off exchange. You save 7.5 cents for every trade from forever.
Yeah, especially if you're trading these actively, I think that's a small price to pay. There are other benefits as well to the community membership. You're going to get a weekly newsletter with some of the updates in terms of products. There's some statistics around standard deviation moves, which are really important for those of you that are trading. Tom, you like to trade. You're a contrarian. You like to see when things move. You want to trade the other way. These standard deviations on the newsletters are really useful to give you an idea. How much does a 2-year typically move? How much does the 10-year typically move? When you see moves above that standard deviation, those are contrarian trades that you can potentially make. So there are other things that you are going to get as part of your community membership beyond just the discount on the exchange fees.
And Tony, let's not forget, as soon as there's options, we'll be able to give expected move, a very accurate expected move on almost everything. But the problem is, since there's not options yet, expected move is a little bit, it's a little bit fuzzier, but the expected move, once we get options, will be, it'll be it'll be perfect 70% of the time. We'll leave it there.
Right. And I believe at Tastyworks, you can trade all of these products in a single account, right? You don't need to have a special, separate futures account to an options account to equities account. You can do them all from one account, including an IRA account.
Yep.
So there is a question that I think is a valid question that I do want to address, which is around kind of the volume, if you will, on small futures, right? And I do want to point out that volume is not necessarily the same as liquidity. I think a lot of investors see lower volume and they assume that there's not enough liquidity in these products. And Tom, you've traded some substantial size in these products. Maybe you're best suited at answering these questions regarding liquidity, which I think is really the root of the question when they ask about the fact that there's relatively low volume.
Yeah, and it's true. There's relatively, we trade about 5,000, like in the neighborhood of 5,000 one way. So it's basically 10,000 futures contracts a day on the small exchange products total. That's both ways. That's the professional side and the retail side. But but that's where our volume's been hanging out in that range. Last month was our busiest month ever, and hopefully it continues to grow. But to be fair, that's why we made a deal to bring on a company with 10 million customers, because we want the small exchange volume to go up dramatically. And Tasty, we have a few 100,000 customers, but we don't have a few million customers. And so that's why we did deals to bring more customers to the small exchange, so we can get more products and better markets, and that's really was what was the objective.
Right. And I do want to clarify, because there's a question, regarding what's the difference between the small exchange and Tastyworks. Just to clarify, Tastyworks would be the brokerage firm that you would trade these products through. Right. The small exchange is the actual exchange that these products are listed on. So you need to have a Tastyworks brokerage account in order to trade these products. You don't need a community membership from the small exchange to trade these products. If you do have the community membership, you get a discount on the exchange fees and the newsletter every single week, but you don't need to have the community membership from the small exchange in order to trade these products. You just need an account at Tastyworks and to enable your account for futures. So just to reiterate again, to open up an account, you can use the link here on your screen, which I will post in your link in the chat window here again. And I will also post a link as to how to enable your account for futures, or the instructions on how to enable your account for futures in the chat window here as well.
Yeah,
if you're interested. Yeah,
go ahead, Tony. I was just going to say there's a number of firms that are connected to the small exchange. Tasty and Interactive Brokers are the two biggest. But there's also a number of other futures firms like Phillip Capital and other ones like that are global firms that are connected to the small exchange. So we're just an investor. It was our idea, but we're an investor along with Jump, along with Peak Six, along with Citadel, along with Interactive Brokers, along with Phillip Capital, like I mentioned before. So there's along with Simplex, which is a market making firm. There is a lot of big players that are investors, and we're just an investor. That's all.
Right. And, I think about a third of you answered that you traded futures before. Maybe you traded one of these futures firms. There are a lot more futures firms that do have access to the small exchange. So if you trade at one of them, you may already have access to them at your futures trading firm as well, if you do have a separate account for that. A great question. How much money is needed to trade a small future? I think that's a great question.
On average, it's around $500. So just to put that into context, on the CME, the average future is probably in the neighborhood of 10,000. And then the micro futures are in the neighborhood of about 1,500-ish, 1,000 to 1,500. And the big futures are like 10,000 to 15,000 in that range. And on the small exchange, they're as low as like $100 and as high as about 600 something. So it's much more capital efficient.
Right. And, some of the smaller products are just $70 to $100. Some of the larger products are $600, $700 in terms of margin. So that's all you need. There's no other minimums to trade futures. As long as you have the margin requirement to enter a single contract, that is all you need in order to enter these trades.
Like Tony, you mentioned before, you were talking about interest rates, and tomorrow the Fed makes a decision on interest rates, right? And if you think rates are going to go higher, like the 2-year, which moved, just to give you an example, it moved 19 cents today, or $19 if you had one futures contract on, but the amount of capital required is $172. So when you think about that, and again, this is an interest rate future with probably a 6 or 7% volatility. And so when you think about this for a second, that's not a bad move, $19 on a $172 investment. That's all. It's pretty reasonable.
Yeah, I completely agree. Well, Tom, I really appreciate the time that you spent with us here today, going over some live trades and embarking your knowledge on these futures products and starting the small exchange. So really a lot to thank you for, and everyone here at the Tasty Works and the small exchange to be on the Q&A and answering your questions. I really hope that this was helpful for everyone who was viewing this today to give you a better understanding of futures products, the small exchange products. And so, Tom, thank you so much. And thank you to everyone here joining today.
Oh, it was awesome. Thanks, Tony.
Thank you so much. And I hope everyone has a great trading day. We will send you both the recording, the slides, and the links from today's session so that you can kind of follow up on these new products, how to access the education going forward, as well as how to open up your Tastyworks account and enable your futures trading. With that, thank you so much. Have a great trading day, and I'll see you guys here next week.